Hi, good morning. It's Ross McInnes from Australian Investment Research Services. We're just uploading our new video. Haven't been on for a couple of months, but we've restarted our AIRS coverage for the morning report. Just to note that we have released a new global strategy report that's available every morning Sydney time about 9 o'clock, which we can email out to clients. This is available for $75 a month or for $750 per annum with payable up front. This covers all the major themes and drivers of the global financial markets from a macroeconomic, regulatory, policy and institutional perspective. Our key strategy for the last 3 months has been to buy the major sell-offs. This has proven successful, but obviously there's still problems in the global economy. Last night typified these ongoing issues that are still underlying the market's nervousness. We had the S&P 500 test new 4-month highs just before the FOMC on Wednesday morning above 1145, but over the last 2 sessions we've seen the market come back, and this morning it closed down with some late selling the last hour of trade back to 1125 level, so it's closed back below the 1130 area, which was a fairly obvious technical level for the market. This was driven again by some new euro zone concerns, with Irish GDP coming in negative 1.2% and the German PMI, which is published by market, coming in below expectations, and continue the theme that the second half is going to be of 2010 is going to be a little bit slower than what we saw in the June quarter, which was pretty strong. On the back of this, we saw the Euro USD rate fall back about 100 points from above 134 and new 5-month highs to current levels in Asia around 133.20. The Australian dollar also came back from its stellar gains of the last 2 weeks. It's got up to 95.98 on Wednesday night. It's trading down at 94.90 this morning. Overall view though is that we are going to see Asia continue to grow at a reasonable pace. China's probably going to be okay, but obviously it's the key risk for the Australian economy in particular, and we continue to monitor that as part of our service to clients. So on the day, we've seen the market consolidate the very strong gains we've seen over the last couple of weeks. We don't expect too big a dip at this point, but are looking for opportunities if the sell-off does accelerate. On the day, the level to watch on the Australian dollar will be the 94.60 level, which is where it rallied from after the FOMC release. ASX 200 index, after 10 days, but fairly unconvincing, is likely to open below the 4600 technical level that we've been talking about in our reports. But again, commodity price is still pretty solid, with copper at 5-month highs near 360 cents a pound and 7,900 a tonne on LME. Gold still at $12.94 an ounce. So overall, still the underlying basis for the economy is still pretty strong. The Australian economy at least is pretty strong, but with the advanced economy still problematic, with US jobless claims last night reiterating that jobs gains are remaining pretty loose. So we'll talk to you guys on Monday morning, and have a good day. If you have any questions, please feel free to email us at research@airs.com.au. Thanks for listening, and we'll speak soon.